Hey guys, welcome everybody to day 25 of the trading marathon here on this channel. My name is Daniel, and in today's video we're going over the 3 different types of elliott wave impulses we can find on the charts. I'm gonna explain to you all the different rules of those 3 different wave patterns, and I'm gonna explain you where you can find them, in which elliott wave count, in which waves they are appearing, and what use case you can get out of that information and how to work with them properly. In tomorrow's video we are going over the 4 different types of corrections, but let's stick to the impulses here in today's video. I'm gonna warn you already, it's gonna be a pretty dry, staple of information. It's gonna be, you can prepare yourself to learn them by heart for 1, 2, 3 hours after this video is done, because you won't remember all the rules after watching it one time, I can promise you that. But we need to go over them, otherwise you have no chance on applying the elliott wave theory or analysis method, okay? So you really need to know them all by heart. But I think, they also make some sense, so you can run together everything that you will come into it. Let's say it like this, but if I now present you with a screenshot, you will say, oh, so that's all I'm gonna need to remember. Yes, you definitely need to remember it all. I'm also gonna take out the slide that we are going over here to discuss it. And I want to start with the basic information. There are 3 different types of impulsive waves that you can find. There is the classic impulse, there's the leading diagonal, and there is the ending diagonal. All of them I have here displayed on this slide, and they have all different rules, they have all different optics, and they have all different waves in which they can appear. If we, for example, take a look at, what do they have in common? Let's start here. Well, they are all impulsive waves. So all of those 3 are waves which are developing in a strong way, in a strong fashion, you can say. They are all consisting out of 5 waves. They are all, if we call them out on the chart, if we want to draw them to present the information, we always call them 1, 2, 3, 4, 5. Okay, that is very important information. All the corrections, we label them with letters like A, B, C, W, X, Y, W, X, Y, Z, A, B, C, D, E. That will be the corrections. But all the impulses, they all have 5 waves, and they are all labeled with 1, 2, 3, 4, 5. Okay, in all the 3 different impulses we have. Also, what is the same in all of those 3 impulsive wave patterns, in all of them, the waves 1, 3 and 5. So really the 3 waves which are moving in the direction of this impulse are also smaller impulsive waves. And always in the waves 2 and 4 of these impulsive patterns, we find any kind of correction, because they're going against the small trend within our bigger overall impulse. Okay? So if we see an impulse to the upside, which is consisting out of a 1, 2, 3, 4, 5, as you can see here in the graph, wave 1 goes in the direction of the trend, so it needs to be impulsive. Wave 2 goes against the trend, so it needs to be corrective. Wave 3, impulsive, 4, corrective, 5, impulsive. And that's the same for ending diagonal, leading diagonal, and impulse. So what is really the difference in between them? Well, the only optical difference is that there, at the ending and leading diagonal, you will find an overlap, okay, in between the waves 1 and 4. As you can see, they are kind of like, okay, the pattern trader would call something like that a rising wedge or a falling wedge. They're looking like a wedge. They are looking like a how to say it in English? Like a sharp triangle, which is going not vertically, not horizontally, but to the upside or the downside. Like they are starting with a bigger movement and they are becoming smaller to the upside, or they are starting with a bigger movement and becoming smaller to the downside. So the only, like all the impulses I'm teaching you, there are impulses to the upside and downside. So there is no, all those 3 impulses can appear to the upside and the downside. You really must understand that. It's just important that you see whenever something has 5 waves, that it is an impulse. Because, well, last video I told you most likely we'll find impulses to the upside. That's only on a weekly time frames and on bullish assets. But in general, if we are looking at a 1 hour time frame, obviously we'll also find many impulses to the downside. Because let's say on the daily time frame, we are looking out for a bigger correction, like A, B, C. You will understand that the waves A and C are moving in the direction of this bigger correction, and our impulses, smaller impulses, A and C, and the wave B is within a correction, the corrective wave. So you really understand that impulses and corrections, they are going in both directions. It's just the impulses are deciding the trends, okay, and are going with the trend, and the corrections are going again. The corrections are going against the trend. So, okay, I think that was the basic information and the optical differentiators that we have here. Well, once again, moves with the trend. It consists of 5 waves, all of them. Well, it's very important at a normal impulse that the wave 3 at least hits the 1.618 extension. So it means the wave 3 must be at least 1.618 times as long as the wave 1 or longer. That sounds complicated, but there is a measurement tool on the chart called Fibonacci trend-based extension, which will make it very easy for you to measure that. So don't worry about that. I mean, the wave 3 can also extend to 2.618, 3.618, something like this, but minimum the 1.618. That the wave 3 must hit the 1.618 is only in the normal classical impulse. That's not a must, but I mean it's a guideline in the ending and leading diagonal, but it's not a must. A must, it's only in the impulse. In the ending and leading diagonal, you must know that the wave 3 can never be the shortest. So let's say, for example, we have an ending diagonal to the upside. It can be that the wave 1 is the longest, then the wave 3 a little bit shorter, and then the wave 5 even shorter. It can also be completely vice versa, that the wave 1 is the shortest, and then we have a longer wave 3, and then even a longer wave 5. Just not the wave 3, it can just not be the shortest, okay? In no impulse, not in the ending diagonal, not in the leading, not in the impulse, in none of those. So that is one very important thing. Oh, yeah, okay, one more, another important rule is the wave 2 can never go below the starting point of the wave 1. But I mean, it's kind of obvious, because the wave 1 goes, let's say, up, and then the wave 2, it should only come half the way back of the wave 1. Or I mean, it can also go 66% back of the wave 1, or 88 at maximum, you know, like everything else is very unclean, not clean, you know. But in no case it can go lower than the start of the wave 1, otherwise that would destroy the count, okay? So wave 1 needs always to be the very lowest starting point, it needs to be an impulse, can be a leading diagonal or a classical impulse. There needs to be a correction. The correction, it should not go below the starting point of the wave 1. I mean, all the exact targets and so on, I will teach you later on. This is really just a theoretical lesson here, and you should really write all the important rules down that I'm telling you. If I would now also come on you with the price targets, it would be way too much for today's video. You won't have a chance to remember anything. But everything that I tell you now is very important for today, okay? It's a plan, everything I'm saying. Yeah, well, and there is, I think, only one last rule missing. Wave 4 and wave 1 in a classical impulse, they are not overlapping. Yes. Then I can also tell you, okay, the classical impulse, it happens in wave 1, 3, 5, A and C. And the ending diagonal happens only in wave 5 and C. And the leading diagonal, it happens only in wave 1 and C. Yes, I think that's it. And obviously the wave 3, it moves always above the starting ending point of the wave 1. Or I mean below if we're talking about a downwards impulse. But I mean, it's obvious that the wave 3, since it's not allowed to be the shortest, it must go further than the wave 1, right? Because we are expecting an impulse in a certain direction. So obviously the 1, 2, 3, 4, 5, you know, it must extend itself and it cannot go sideways. 1, 2, 3, 4, 5. That's some kind of correction. Then something like this you would call WXYZ, exactly what we hate, okay? But in this video it's really about impulses, and all the impulses, they are the ones that are moving, they are the ones that do some distance on a chart, you know, some price action. So that's what we are looking out for actually when we are making our trades. We always try to catch a wave 1, 3, 5, A or C, nothing else. Everything else you actually want to skip. You want to not have any trade open, if anything else than that is happening or playing out. Well guys, I think that was all the information. It looked more difficult than it was, right? If you write all that down, and if you remember all that by heart, and if then later on, after we also discuss the rules of the corrections, I will show you that all on the chart and how it's playing out, you will understand everything. But very important that you use your time today, and also, you know, like in school. I told you now the rules, now you sit, you write down, you try to remember, so that in the upcoming videos, when we are going over the chart, you already have this knowledge in your head, so that I will show you something and you will say, ah, okay, you explained this already to me. Like this we need it, okay? So well, I think that's all. My today's half marathon, very important, number 25. Yes guys, that's it. See you in tomorrow's video, stay hard, ciao ciao.